Good morning. This is Forex in Four. Today is Tuesday, August 2nd, 2011. Now, this morning I'm saying we're halfway home, and this is in regards to the U.S. Deal on the debt crisis. Last night, U.S. House of Representatives voted in favor of the bill. It goes to the Senate today. Hopefully it's going to pass, and hopefully that's going to remove a little bit of the uncertainty in the market. Problem is that markets are down this morning, and people are kind of scratching their heads wondering why. And, really, if you think about it, this whole debt ceiling debate and what's been going on, it's really been more of a sideshow of anything. And what it's really done is it's taken the focus away from what's going on out there in the general economy, which is overall global weakness. Now, we're looking at the euro here, okay? And right now in the Eurozone, they've got yields rising in Italy, also in Spain. Spain's got a refunding to do on Thursday, and they're concerned that borrowing costs are now starting to get higher, and it's going to make it harder for these countries to service their debt. So Italy's sort of in the target zone right now for the bond vigilantes, and we're going to see what happens with their debt yields and what that's going to do to the Eurozone in general. So Euro's lower this morning. Okay, but what we want to show is that actually it started off with the big move lower yesterday, all right, and that came on the ISM manufacturing numbers here in the U.S. All right, came out at 9 a.m. They were expecting a reading of 55, came in at 50.9. All right, and you can see here, boom, just a nice big fat sell-off. All right, and that took the markets yesterday, which started out the morning with a little bit of elation. And those of you who saw yesterday's video know I was sort of a little bit concerned about what was going on because we had the futures higher, we had oil higher, everybody was rah, 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 but yet we had a lot of strength coming towards the Swiss franc and also the Japanese yen, and that was sort of the key that, hey, maybe something may not be exactly right there. And sure enough, what happened? The market did a total reversal. Dow Jones futures were up 100 points to start the day. All right, at one point we got the market down 100 points. All right, came back to just a little bit down, relatively flat, but you can see the difference. I mean, gold came right back, and we can look at the gold chart right here. I'll just show you. Let's go to the 30-minute chart just because we want to pay attention to the shorter time frame. But you can see here, 30-minute chart. All right, look at gold here. Boom, up over 1440. Excuse me, what is this? Oh, that's not gold. Apologies. Here's gold. Let's take a look here. Okay, gold up over 1630. You can see we're approaching a triple top here at the R1 pivot resistance, 1631. All right, but yesterday you can see how gold reversed. All right, here was the actual move higher, okay, after we got that 9 o'clock selling. So I also want to take a look at, let's look at Euro Swissy right now because we've got a lot of risk coming from the Eurozone. And you can see here we've hit an all-time low just under 110 here for Euro Swissy. All right, and we're sitting just ahead of the S1 support here at 109.75. So it's going to be interesting to see what happens and see if this can hold on. Now, overnight we had the RBA came out and they had their interest rate decision. Okay, they held rates steady. All right, that wasn't a shock to anybody. They're concerned about the global slowdown going on both in China and here in the U.S. And at this point, the medium-term inflation that they're seeing does not outweigh the overall global concern. So they've sticking steady with rates at 4.75%. But don't forget, if you're someone who's a carry trader, that's a pretty nice yield right there. All right, just a quick peek over at the Kiwi. Kiwi's coming in as well, although they had higher wage prices there, which shows that they are getting a little bit of the inflation happening in New Zealand, and there may be a possibility that they may return to normalized rates. Remember that they had to cut 50 basis points earlier in the year in response to the earthquakes that they had seen in their second largest city. So a rate hike in New Zealand may not necessarily be a statement about what they think of the global economy, but rather a return to normalization and try and provide a little bit of price relief to their people. So going to keep an eye on the New Zealand, see what's going on here. In the meantime, I want to go back to Swiss franc. You can see here Swiss franc has been the safe haven asset of late. Okay, Swiss franc and gold, as well as Japanese yen, and we're going to get to the yen in a second. But you can see here, all right, all-time high for Swissy versus USD. All right, under 77. And man, I mean, when this thing broke over here last week, I mean, that was really just a pretty big sell-off. And you can see that the trend for this is just, it's been a pretty nice trend here all the way down, selling dollars versus Swissy. So in Switzerland, they actually had retail sales figures came in showing 7.4%, which is better than the negative number that they saw last time around. So that's kind of what we're looking at here. Now in the U.S., obviously, we're consumed by this debt limit vote today. It goes to the Senate. I'm sure they're going to pass it. Otherwise, they wouldn't have taken it this far. All right, but the big story in the U.S. is going to be what's happening here at the end of the week with the non-farm payrolls report. And non-farm payrolls report, they're expecting about a gain of 100,000 jobs, and we're going to have to see what happens. We know that last month the jobs numbers came in and they were pretty dismal, and that always leads me to believe that, well, then that requires the market to take their expectations lower, and once the market does that, then we usually come in with a beat, and we usually do better than expected. So Friday's number is going to be important, but you can see here we're looking at dollar yen, and you can see here that yen has been strengthening versus USD. All right, we get to the 76.30 level, which I called a couple trades last week while I was out on vacation. One of them was getting long this pair, okay, with the stop at 76.25. All right, just below. If we look here on the daily chart. All right, where's the daily chart? It's coming. But just below the all-time low that we saw after the repatriation of yen occurred after their earthquake tsunami that happened. And I'm not certain why my chart's taking so long. Sometimes these things, oh boy. Let me just go back to see if I can get the 4-hour up, maybe. Okay, 4 hours not going to show us much here, but you can see we bounced off of that level. So we're looking at Japanese yen right now, and now the talk is heating up about potential Bank of Japan intervention, trying to weaken the yen to help the economy recover. Okay, but right now it's been flight to safety, weak dollar trades, which have been driving yen higher. So going to be interesting to see what happens. They've got interest rate decision on Thursday, as well as the interest rate decision of the B of E and the ECB, who I don't think anyone's going to do anything at this point. But Japan, we're going to have to see if they actually do try and intervene, or if they just try and jawbone the yen lower. So that's really what we're looking at today. What we've got, debt crisis going on. That should be resolved today with the Senate. Go to the president. He'll sign the bill. Okay, great. We kick the can down the road a little bit, and we'll continue this debate throughout the fall. All right, but the real story is weakening global economy. All right, we have PMI figures slowing down, ISM manufacturing slowing down. Okay, employment's getting worse. All right, GDP numbers we know about were bad. I think we just need to start bracing ourselves for what's going to happen. And I think looking at that gold market, it's tough to get in at these levels. But man, gold looks attractive from just a purely flight to safety perspective. So anyway, that's what we're looking at today, folks. Good trading to all.